Welcome back, everybody, to the weekend show where I'll be breaking down the stock market. So, before we get started, please hit that like button, and that is greatly appreciated. And if you're new here, definitely consider subscribing. Now, if you want to support the channel, go above and beyond and get daily trade ideas, swing trade ideas, live trading, and all kinds of long term and short term setups. Definitely head over to Patreon, and that link will be down in the description for you guys. And now let's get right into the market. All right, so welcome back once again, guys. And Trump's tariff was thrown out of the Supreme Court, and the market rallied on that. Not that much on Russell, but you can see everything else was up. So that was the big news that came out on Friday, and that's why you saw that initial pop in the market. And the market definitely wasn't going to give up any of those gains, and we did close at the high of the day pretty much. You can see here. Advancing, we got 50.6% and declining 44.9. We also have Dow going up 0.47%. Nasdaq up almost 1%, S&P up 0.69%, and Russell pretty flat on the day. 11 sectors that makes up S&P 500. You can see energy and healthcare and consumer defensive here on bottom. And what we got? Communication services, Google and Meta, they were up. Basic materials, consumer cyclical. We had Amazon up big time also. Financial, real estate, technology, utilities, and then we have industrials going up in the green. Stock market map. What do we have here? You can see the big names except Microsoft and Oracle. Nvidia was up 1%, Google up nearly 4%, Meta up 1.69%, Amazon up 2.56%, Tesla flat, Apple up 1.53%, and you can see the financial names are also in the green for the day. What do we have next week? Well, not much to look into. We do have ADP employment, that's on Tuesday. But then when you look here, there's not much really going on. And then we got jobless claims. Then we have PPI coming out again on Friday. So we'll see how the market reacts to that. I think Nvidia also has earnings. Fear and greed index 43 still on fear. 34.5. So bullishness actually dropped down here on this recent survey, and you can see bears went up 30, almost 37%, and neutral also went up 28.5%. And I think with that, there might be a little bit of rally back up here in the market that we're gonna see going into next week. So let's talk about it. Unless something happens over the weekend, let's get right into S&P 500. All right, so is it any surprise that market is actually up on Friday with OPEX and all the news that came out? Why the market going up? Well, if you look at this balanced range, this is the top of the range right here, which is pretty much all-time highs or equal all-time highs. Well, look at the bottom here. Touch, touch, and again we touched it, right? Bottom of this range. And from this range, we went back up almost going over 50%. So odds of going up and hitting top of the range is definitely on the table, and that can come early as next week. And if you look at my screen, where is that 20-day right here? Right about that 689, and we closed right over that level. You can also see a nice bullish engulfing candle. Bar to bar, we actually made a higher high from that previous high right here, which was on Wednesday. So technically, I would say it's not extremely bullish, but neutral to slightly bullish. It's definitely not where bears have the edge. We closed below this range right here, which is at 676, 675. That's definitely not the case here. So going into next week, especially over that 689, we can definitely go up to that 691.62. And if we can cross that 694 and then into the blue skies again, 696, 697, and maybe we'll put in another brand new all-time high. To the downside, there will be support right here at 686 in line with this 50-day moving average, which is sitting just above that level. Underneath that, that opens the door for a move all the way down to 680 to 680, and then bottom of this range right here at 676. So it's very simple. As long as we stay above this 20-day or even at 686, we can hold above that level. We're going back top of this range right here, which is going to be close to all-time highs, or maybe even putting in a brand new all-time high. If we cannot do that and we fail to actually, close or stay over 686, in that case, we're coming back to the bottom of the range, which is 676, and only when that breaks, you're going to see more selling, and definitely there will be a bearish edge in the market once bears can take over and uh, get spy under 690 676, and that's just not the case. You can see over and over, even right here we had that breakdown, but then what happened? Boom, we're right back up. Right here, went back up. Right here, went back up. Right here, back up. Right here, and we're going back up as we speak right now. So just because we came down here does not mean that we're just gonna break down and go to zero. You cannot trade the market like that. So careful. I mean, we're going back up, and in this case, we could be retracing back up to that all-time high once again. On triple Q, it's up 0.88%, so nearly up 1%. And you can see nice bullish engulfing candle. A little bit of selling pressure here at 610, but nothing significant where I would say, oh my God, market is just gonna go down even more. But you can see high, lower high, lower high, lower high. And we initially actually made a lower low. So we could be setting up anything below 613. I would say this is a lower high, and we could be going down and making a new low. So completely different picture right here on Nasdaq 100 here on triple Q. So you got to be careful. And then we have, even if we come back up and get to 613, maybe over that range, look at this. We have a negative sloping 20-day and the 50-day, which is going to act as a resistance right here. So unless we can clear, I would say 617, that would be a clear path, just like S&P, that we are going back up to the top of the range, which is just not the case as of right now here on Nasdaq. So next week, your key zone here, that would be 606.85, right about here. And underneath that, we're coming back. There's a lot of gamma exposure at 600, so we could be pulling back into that support just like we did on Friday. And underneath that, we could be going all the way down to 594, which is bottom of this pretty much range, or this expansion here to the downside. So keep an eye on this. But once we get under 594, we have a date with the daily 200 SMA, which is all the way down here. So be careful with Nasdaq. Definitely not looking good as S&P. And if this thing actually reverses back, that could pull S&P down as well. So that is the new thing in the market, where S&P is looking good, but when you look at Nasdaq, obviously it's not firing in all the cylinders. And when you look at like software names, again, they got crushed down on Friday. I mean, just look at even Microsoft itself. It's really not going up unless we have software names participating in that rally. You're not going to see a big move, especially here on Nasdaq. And overall, like tech sector, they have to bounce even more, because those are the ones that are beaten down right now. And that's why you're seeing this type of picture on Nasdaq 100. Another thing I want to point out, just simple downtrend, right? It's a downtrend, and you can see we can barely get over that. So if we can break, I would say a 610 here, stay over that, and we do not come back inside this range again, that would look a little bit better. But I would like to see it over that 617 mark. That would look more bullish for full retracement back up to that all-time high, or possibly will make another brand new all-time high if this is the double bottom here on Nasdaq 100. On DIA, it's up 0.34%. So we did not actually close over that previous all-time high, just slightly right on there where we closed 496. So it's not extremely bullish, and you can call this somewhat of a bear flag as well on daily. Again, if you look at my screen, the daily 20 SMA is sitting at 494, so that's going to be a support to watch. But look at the pullback last few days, exactly down here, 491.36. That has to hold. Otherwise, it's coming down to the 50-day moving average, 489. There is a gap there. And underneath that, that opens the door to this gap all the way down here, or even bottom of this range. I mean, if you call this a range right here, let's see if this is a range right here. This is definitely the bottom of the range, and we're just trading inside the range unless we stay over that 496.49, and we can move towards that 500 mark. That would look more bullish, maybe possibility of hitting a new all-time high. But as of right now, we're trading in the range, and if the range does not expand to the upside, there could be downside here on Dow as well. On IWM, it's absolutely flat on the day. And if you look at IWM, definitely not looking strong as S&P, and definitely not looking good as Dow Jones. And you can see, I mean, we did not take out this high. We did not even fill this gap right here, which is just over 269. We came really close to it. We did not fill this gap, and now we're just chopping here inside this range. So here on IWM, if this thing actually gets under that 263 mark, which is this white line on your screen, you will see a drop down to that 257 50-day and top of this rejection. Now that would act as a support, and underneath that we could be coming all the way back down to not only 252, we could be even filling this gap at 249. Now things are going to look bullish if we can stay over 269. That holds maybe some consolidation here, then watch out for possibility of a brand new all-time high here on Russell. And in that case, I mean, it's going to do that because we'll fill the gap. It's going to consolidate here. It'll look a lot more bullish. But as of right now, we're just chopping. I mean, it's the same thing that I was showing you guys on the other ETFs. We're just chopping inside this range, somewhat of a bull flag, you can say. But we need to break out of this range or break down from this range to see more downside. And as of right now, we're just in the range. On VIX is down 5.64% on Friday and still trading over $19. And you can see we're inside this channel pretty much. And this is the bottom of the range, which is around that 18 to 1750, and the 20 days sitting right there. So technically, I mean, we're just trading inside the range. This is the top. You can see multiple rejection, multiple rejection. Even this rejection came last week. I think that's off a Tuesday session, and since then we're just chopping inside the range. What would look more bullish if this thing gets under out to 17? That's gonna mark that market will hit another all-time high. I don't know by how much, but definitely it's there. But so far, we're not breaking this range. I mean, you can see you can go back to December 25th, all the way there. Since we put in a bottom here, we're just chopping. Every time we come back down to this trend line, VIX going right back up. So if you see VIX coming down here next week, let's say 17 to 18 bucks, and if it holds up here and the 20-day and the 200 days right there, definitely that looks bullish for a bounce as long as the support holds, and you're going to see the market pulling back again. Unless you see VIX spiking and going over 20, which is did actually Friday once again, but you can see the rejection came really quickly from that 21 dollar range and came back inside under $20 right here. So VIX needs to get over 20 to see more upside, maybe up to that 21 into $23, and maybe up to these highs at some point if this thing remains inside this channel, whether it's tomorrow or next week. Sometimes you'll see this range breaking, whether it's to the downside or to the upside. But so far, that's your target. Bottom right here, expect a bounce as long as it holds right here. Top, expect a pullback. As long as this thing stays underneath this trend line, it will pull back so I can extend the line even more and you guys can see it even better. Maybe extend this as well. So we're just trading in the range. And yes, somewhat of a bear flag you can say, but it's definitely not something where I would bet against, market and say, oh, no, VIX is gonna go down to zero and market just gonna hit an all-time high. Let's just go and get all in because we're only like few points away from all-time high. And when market hits all-time high or gets into new all-time high, definitely that is something that I don't like and I don't really support as a big bull, even though it's bullish, because where am I going to sell anything if I'm going to buy something? buy at a new all-time high and sell at another brand new all-time high. That's not what we do in the stock market. So definitely, you need to see the market pulling back, and so far, market barely pulling back. I mean, 1-2%. If you call that a pullback, then forget about it. You're day trading is definitely fine, but this is not something where I'm looking to go long, as VIX just chopping inside the range and SPY is also in a range where it's not actually breaking out or breaking down. So we need to see something happening soon to see the trend actually continuing to the upside, or the trend finally breaking down and coming down and giving us that nice juicy correction where we all can get into the market and maybe buy something, especially if it's S&P 500. So the dollar was flat on Friday, but why I'm actually showing you guys this, because you can see the dollar came back up and we did close slightly over this trend line. As a matter of fact, you can see low, high, higher low, and this is actually a new high over this high. So technically it's looking a little bit better. I would not say this is extremely bullish, but the dollar holding this monthly trend line, and that actually suggests that we could see some sort of a reversal here on dollar. You can see a long wick here on bottom of this candle. Well, you have a wick on top as well, but this one is more meaningful, and you can see we're bouncing off of these lows and trying to hold this trend line. And if you go back, this is a multi-year trend line. You can see all the way back here, and so far it's holding up here. So if this thing holds up and rises back up, maybe comes up here close to 100, maybe 101, that would put pressure on the S&P 500. So just you want to keep this in your back pocket, where dollar is bouncing and it's looking good, but not quite out of the woods yet. And that's all I have for you guys in this video. Thank you so much for watching.